Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is February the 4th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. I want to first off by taking a look to see how the indices closed the session out here for today. The Dow Jones was down 129.71 points here. The NASDAQ was down close to 48 points, closing the session down 47.93, and the S&P 500 was down close to 17.5 points here, closing the session down 17.46 points. The weakest index across the board out of these three here today was the NASDAQ. It was down 1.51%. Pretty much red across the board in different sectors and different indices here. If you take a look at the breadth today, we had 4,934 issues declining. We had 1,304 issues advancing on the NYSE, NASDAQ, and AMEX. So in general, breadth was definitely in favor of the bears today. And this is a little bit of a change because if you take a look at the ratio between these two here, it's just about almost a 3-to-1 in favor of the bears to the sell side. So we haven't seen that type of breadth action in a while now, so it's definitely something that we have to take note of. Now, I wanted to talk about the triple Qs first because you can see here the triple Qs have been trying to break back above that key 67.38 level that we've been showing you guys here for the past couple weeks. And you can see they trapped everybody above that 67.38 level there 2 weeks ago. They trapped everybody above that level there on Friday. And now look, all right, everybody that was buying above, every time we got above 67.38, anybody else getting giddy or buying above that level, well, they got fooled once, they got fooled again. I don't think they're going to get fooled for the third time if we get back up there. So, in my opinion, the triple Qs are vulnerable for a breakdown below this key 66.22 level. Call it 66. We've been in this range for the past 1, 2, 3, 4, 5 weeks now or so here. If we break below 66.22, again, call it 66 hold number, that key level there, we're going to be looking for a gap fill all the way down towards this 66.15 level, which comes from this other box I'm going to highlight for you guys right now. All right, which you can see right there. So this whole little area is a nice little box, nice little air pocket down there that we can sell off to if we break below and hold below. Actually, it's 66.17 should trigger the buyers. Obviously, 66 is a whole number, but 66.17 is actually the low from this little candle that we made right here on January the 8th. All right, so below 66.17, look for a break, of course, below 66. And then we have the 200-day simple moving average around 65.59. The 200-day exponential moving average is around 65.15, which also lines up with the gap fill. So this is going to be pretty interesting for tomorrow, and we'll be doing a scan to look for some weak technology stocks, all right, or stocks that have not been performing well that trade in the Qs or the technology sector. All right, so top side resistance again 67.38, bottom side support, watch that 66 level. All right, we take a look at the SPY now here. All right, the S&P SPY was down $1.70 today. You can see we gapped down, had some selling pressure. Again here, we're starting to see a little bit of different characteristic, right? We've been grinding above this rising 8 EMA and 5 EMA for the past 3 or 4 weeks here or so. 1, 2, 3, 4, for the past 4 weeks or so. Today, we finally got a close with a little topping tail action type of action right there, where not above topping as far as above this one, but topping as in they rallied up towards the highs, they sort of right back down. It's a little tail top right there. If we break below the lows of today, if we break below 149.43, I would have to assume we're going to come down towards 149, and then the next key moving average, which I think we're going to hit, which I'm pretty sure we're going to hit, is down here at 148.44. Hopefully they don't gap us down tomorrow and give us a little BS day. Hopefully they could open us kind of slightly higher to flat, and then we could sell off through these levels right here and get a nice little momentum short in some of these inverse ETFs and some of these key stocks. All right, so keep that in mind. If we break below 149.50 and hold, we should be heading back down towards 148.44. If we hold 149.50, expect us to go back towards today's opening price, which is around 150, 150.32. Okay, so this is a nice little top range right here. Now let's take a look at the IWM. The IWM has been the strongest index, of course, that we have been watching. As you can see, it's kind of coming back in this little channel from this key trend line that we have right here. All right, and if we break back below this key trend line, we have a nice little air pocket that we could come into right here. Okay, that could take us all the way back down. First of all, to these little lows that we have right here around 88.66, and then the rising 20 EMA SMA around 80.48. We break below that, then we're going to be looking for a move back down towards this key trend line around 87.92. Eventually, I think we hit this key trend line right here. And one thing that you could do right now actually is take this trend line right here and duplicate it to the top of this trend line right here from this channel. All right, and you can see everything kind of lines up pretty much congruent here, even, you should say, where we have a key trend line and that 50% channel line is actually adding up. So some good information we have right here off of seeing that. All right, and as you guys know, this is kind of forming like a nice little rising bearish looking channel, which of course you guys know these rising channels usually resolve to the downside. So we'll see how that plays out. But again, characteristics are starting to change on the SPY, and everybody that keeps on buying the Qs above 67.38 is getting suckered into the long side and having to sit through pain. So I think we pull back a little bit here. Let's take a look at the dollar futures, see what the dollar futures are doing today here. Had a nice little bounce in the dollar futures, and they continue to hold that bottom range. You guys have been watching these videos. You guys know we've been keeping close attention, paying close attention to the 79 level here. Every time we come down there, they bounce it off, they bounce it off, they bounce it off, they bounce it off. So for the past 1, 2, 3, 4, 5, 6 times, they've been buying that 79 level down there on the dollar futures. And, you know, it's all right because we know that they're doing it. So therefore, we're expecting the dollar to get a bounce on there. Therefore, we're not really going long commodities down here or anything that's kind of related to the dollar strength. We're pretty much going along those commodities or those stocks related to that go up when the dollar gets weak. All right. Up here, and we're getting light those stocks or those sectors that go down where the dollar gets strong in the support areas. All right, really until we break, you know, above this level and hold on the dollar futures, or below this level on the dollar futures and hold below that level, then we're going to be expecting the dollar to chop around in this little area right here. I mean, when we break above this and hold, and when we break below this and hold, that's when we're really going to get some nice action in the markets. As you guys know, we've been watching these currencies pretty close here. As you know, they're starting to get a little bit interesting here. We've been all over the euro. We've been nailing this one left and right to the T. They had a gentleman come out on Bloomberg the other day when I was listening to the radio in the car, saying that the euro is getting a little bit too strong. But they were saying the same thing a couple months ago, or a couple weeks ago, I should say, and it continued going higher. So either way, had a nice little engulfing candle right here. This candle of the selling pressure that took place today engulfed the previous 1, 2 or so, and just about the third body right there. So we could expect some selling pressure in the euro, some buying of the dollar, maybe some short-term weakness in these commodity stocks that have been rising up on this weakness in the dollar. And we'll take a look at that right now. Let's go ahead and take a look at crude oil. All right, crude oil was down $1.64 today. Here, went right to our target. Again, we've been watching crude oil ever since it was down here, but more or less ever since it was chopping to the supply area that we talked about. And it hit our target of 98, and now it's pulling back. We're probably going to be looking for a pullback back down towards this 93.54 level. As this was prior resistance, it broke out, so now it should see if it can hold as prior support. So we are expecting a little bit of pullback in crude oil. And if you take a look at down towards that $94 a barrel level, if you take a look at USO, USO has been lagging as well because they have the same pattern with the overhead supply, you know, from all this action that we had back here, including the trap action. Everything looks pretty much to the T the same. However, notice how the USO was not able to get above that 36, up towards that 36.35 level, which is the top of that band, and the crude oil futures were able to get back up there. So that's a little bit interesting. Take note of. Just kind of shows you how the ETFs do not exactly correlate with the underlying commodity or what they're trying to track. Because if that did happen, the USO should be up there, in the same area. That crude oil futures stayed up there towards the top of the band, up there towards 36.36. Let's take a look at GLD. All right, then we'll take a look at the gold futures. GLD got a nice little bounce today, up 55 cents. Gold in the miners actually held up a little bit today here. GLD needs to break really above 160, 165 to really get me interested in it. To really get me interested in it, but in the short term, if it could break above 163 and start showing a bid, that would be a little bit interesting as well. All right, take a look at the gold futures. Let's see how these things are looking here. Up $4.90 today here, and they are still holding above this key trend line. And maybe we're going to be looking for some type of compression pattern here. All right, I'm actually going to draw that trend line in right now. Maybe we're going to be looking for a nice little move in gold. Who knows? I mean, I have to take a look at some of the gold miners to see how they closed out the session today. I know a couple of them are getting a little bounce in the early morning session. I'll take a look at a couple of those here shortly. But this is coming into a little compression pattern here off of our key trend line. and these highs that we have right here. All right, and these lows that we've been tracking against that key trend line again. All right, so we're keeping a close eye on gold this week and next week for sure, unless we break out this week or unless we break down this week. But gold's going to be doing something here in the near term. Make sure you keep an eye on it. All right, take a look at the GDX. The GDX getting a little bounce here back inside this little channel from this little measured move. You can actually take your little parallel channel line here, and you can duplicate that and move that down here. All right, and you can see how these are pretty much symmetrical. All right, and they're the kind of same distance here. All right, so you can see that we're holding this little bottom trend line. If the GDX can get back above 143, remember we're going to be watching for a move back towards that little key channel area that we've been watching since we're not able to break back above that little yellow band here from our channel that we broke down out of back here. All right, you can see every time we try to get back inside that channel, they break us down. Then we had this nice little compression pattern that got us to get short the GDX down here at 44, which we called to you guys to watch the GDX for this nice little compression move. That broke down. Now, like I've highlighted in the weekend review, the real test of what this gold mining sector wants to do is if we break back above 44 and we break back inside this channel, this will be a nice little shakeout from all this action right here, right? Or if we come up here towards 44, we hold that little prior support, which now is going to act as resistance, and we put that little lower high in, and they short the gold miners right there, or we just chop around. And the reason why I'm looking at these different scenarios is because on the weekly and the monthly chart, again, like I showed in the weekend review video, we're kind of in an area where you're like, okay, what's the risk to reward of getting short down here? There's really no benefit because support is right there at 40. So you're going to short here at 42 to make $2.36, or you're going to try to buy down here in this area, maybe expecting to move back up towards, back up here towards these 48s. All right, so and right here you will have to risk at least three. You will have to risk at least you will have to put a stop at 46 if you're looking to get short this GDX to really make sense, especially if you're like a little intermediate trader or like a swing trader, and you think the miner and the golds were going down. So this sector looks like it's going to start giving us some decent scenario plays, setups, whether it be to the top side, to the downside. So we have to keep on watching it. But it's almost gold time for these gold stocks here. We're going to wait to see. We're not sure if it's going to break up or down. But right now, it's looking like it's starting to warm up for something. So we have to keep it on watch and wait for more clues. All right, let's take a look at SLV. SLV was down 9 cents today. It did, however, close up positive from the gap down. This thing's looking a little bit interesting as well. Take these little highs right here and take these little lows right here. You can see this one starting to compress a little bit as well. And we're going to be watching to see what this wants to do right here. SLV. Taking a look at the volatility index, the VIX. The VIX, nice little pop up today here. And you can see we're back above that key 1350 level. So anybody that was trying to short volatility below is 1350 right here in this little zone, they're feeling a little bit of pain. And who knows, this could possibly be a bear trap. We have in this little box right here. We have to wait and see. All right, but the longer we hold above 1356 and the bid starts to come this volatility, we're going to be expecting to move up in vol, and we're going to be trading that VXX intraday on the dips to maybe partake in some of the opportunities that this volatility index could have for us here. All right, so let's talk about some stocks. Yum came out after the bell, all right, and they didn't do pretty good. They did not do well at all. You can see the stock sold off here. It's going down still pre-mark after hours. They closed at 63.96 and it's currently trading at $60 or so. So down about $4 after hours. Let's take a look at this. So we're going to be trading this tomorrow. Matter of fact, here should be in play. Baidu's at this key level right here from this little zone. When Baidu broke back inside this little supply zone, I highlighted it out to my traders that trade with me. And, whenever you have a stock that compresses this little supply zone, you usually get a nice pop like that, as a lot of stops are above this level right here. And that worked out pretty well. But now, guess what? It's back down here, making these little lower highs against this key 106 half level. And now, after hours, this stock got clobbered as well. So, and one thing to take note is Yum, they do a lot of business in China. Baidu, obviously, is the ADR, so it is heavily involved in China. So what is this telling us? Is China slowing down? Let's take a look at the FXI. The Chinese ETF, all right, looking a little bit toppy up there, a little triple top at that 43 level there, all right, and not only a triple top, but this little trend line we have right here it's going to be something to watch, okay? Because now we have this nice little upward channel action, type of action right there. And what is this telling us? We have a little triple top. You got your 1, 2, 3. And, we could pull back in. We're below the short-term moving averages. Next support is going to be from the rising 50-day and 50-day simple and exponential moving average in the daily time frame. So we're going to be doing some scans of some of these Chinese stocks as well. CTRP, see China Mobile. We're going to be doing some research on these stocks here. But in any case, FCX, they're heavily involved in some China action. We'll take a look at that as well. SCCO, copper stock. So what else? Apple. Let's take a look at Apple. I know you guys. Let's talk about Apple. So let's check it out here. Apple has not been showing us any type of well-established base at all. It's been chopping around here, gapping up, gapping down, chopping around. It's not showing us any conviction that it wants to try to fill this gap up here right now at the moment. So Apple's definitely looking weak. You can see it's having trouble breaking above 460. Has some short-term support down here around the. Go ahead and mark this up for us here. Has some short-term support around the 435 level, some resistance around the 460 level. Every time they break us above 460, you can see that they're trapping those longs. All right, and we can't break above 460. 460 actually held as resistance on Friday, and now we got a nice little bearish bar, and next support is down towards 435. We break below 435. This thing looks like the next target will be around 422, or you can even say 420. So we'll be looking at Apple. Maybe if Apple gives a nice little tight range set up for a breakdown intraday tomorrow, and it's not chopping around trying to chop people up, we'll probably take some short trades in Apple just for a quick scalp intraday type of action. Amazon, this is another weak stock breaking down $5 today. It's currently holding on to the 50-day simple and exponential moving average in the daily chart. If we break below 258.20, which comes from this little day we had right here when they had earnings and they sold it off there, all right, we could come back down towards 250. Got to keep an eye on these technology stocks. With the Qs not able to break above that level, I do believe we will be able to fade some of these stocks, especially the ones that are these technology stocks that have traded higher but have not been able to make new highs and have been trading sideways near these highs. People are probably going to start coming in fading those stocks. So we're going to be doing some scans tonight to try to put some ideas together. And as always, we'll make sure we give it to you guys that are in our room. If you want access to our room, send me an email at ccooper@wallstreettrading.com, and I can give you more details on that. If you're looking to trade with a prop firm that's going to help you out, give you nice leverage, high profit splits, low commission rates, send me an email at ccooper@wallstreettrading.com, and you can find us there, or you can put your information out there on Monster. We also have a way for you to submit your resume and your information to us on Monster, as we do go out there to college fairs and get involved and trying to show some of these graduate students how to make money, since they're going to be looking to pay off those loans. And we're here to help them with that by making money in the stock market. In any case, have a great day, guys. I'll catch you guys bright and early tomorrow morning in the chat room, 8:20, 8 o'clock. I'll be there. Today was a great day. We had a lot of stuff in play today, and looking forward for more action tomorrow. Cheers.